right, good evening, ladies and gentlemen. Welcome back to episode 2 of the Australian Gold Weekly Review. We're recording this on Saturday, the 16th of August. And just to remind you, this series will focus on weekly movements in gold, silver, oil, as well as movements within the precious metals and mining equities sector. My name is Shah, and joining me is none other than the managing partner at GoldHub Australia, Brian Chu. How are you, Mr. Brian?
Great, Ved. I heard that you flew back from India to Qatar. Is that right?
Yep, that's right. So while we were shooting the previous episode, I was recording from India, and I just came back to Doha, Qatar, which is where I live, yesterday. So, yep.
We're actually, both of us are in slightly different locations for this episode. Mine's a once-off. I'm down in the South Coast for a weekend getaway, but I'll be back up in the Southern Highlands next week.
All right, that's good to hear. I'm just back from my vacation. So, thank you so much, everybody, for your reception for on the first episode. We've got about 700 views within a week, and we're really pleased with the reception that we've received, especially in terms of the feedback. And we're happy to tell you that we've taken into account all of the feedback that you've provided. For starters, I've got myself a lapel mic. There was quite a bit of feedback in the last episode that my voice wasn't loud enough for the viewers to hear. So hopefully my voice is clear now. And we've also agreed to not include any form of background music as we both speak throughout the course of this video, so that you can actually hear what we're saying quite well. And once again, before we start, we would like to let you know that none of the content in this video constitutes financial advice, and that we recommend you seek a licensed expert if you're in pursuit of financial advice. And without any further ado, let's get started with this weekly wrap-up that we're going to be talking about in this commentary is none other than Evolution Mining. Now, we did bring up Evolution Mining previously in this video, and we're sort of going to dissect their stock price movement this week further because I don't remember the day. Yes, it was the 13th of August. And within half an hour of the market opening, their stock price increased by 6%. And that was because they had released their FY25 results via a presentation earlier that morning before the market opened. And that presentation was full of information that was quite positive in tonality as well as nature, which did cause that surge in stock prices. Firstly, they recorded an underlying profit of $958 million and a record net profit after tax of $926 million, which are both up quite sharply considering the year-on-year movements. They also got a record EBITDA of $2,161 million, which is basically $2.16 billion, with a strong 51% EBITDA margin. And more importantly, their group cash flow doubled to $787 million, with major contributors including their Kowal mine deposit as well as the North Parks mine. Now, the realized operating margin increased from 53.7% to 61.6% for the year, which is a record high. And when we adjust for hedging, the standardized operating margin increased from 54.1% to 60.8%. And therefore, it ranked second, only behind Capricorn Metals. Now, we've mentioned two very important things over here. One is the group cash flow, and the second is the standardized operating margin. And I think this is for another video where we discuss the importance of cash flow as well as considering standardized operating margins, which is a relatively new metric developed at GoldHub Australia. That's definitely for another video. But how important do you think is cash flow as well as standardized operating margins when it comes to such short-term valuation bursts in companies like Evolution Mining?
So the reason why I use the operating margin as a way to compare whether a gold producer is good quality or not, along with my value to profit margin multiple, is mining companies are the cash and capital intensive companies. Whereas you may have blue chip companies in, say, retail, consumer staples, engineering, mining services. You have companies where they may have more stable businesses. I probably wouldn't say mining services and engineering would be stable. I'll say maybe property trust perhaps, and property trust banks and say Woolies and Coles, they are more stable because people, you have to eat every day. You need a place to live, or you need a place to deposit your funds. So in those companies, you don't need that much. You can set aside less cash in order to invest in the longer term. But with mining companies, very cyclical. Even though they do invest it for the longer term, with mines, as you're extracting minerals out of the ground, you need to go and continue to explore in order to find further deposits beneath the ground. Otherwise, if the mine depletes, then the return on capital in that property is much lower. And therefore, if your return on capital is lower, it's less profitable, the price is going to come down unless you find another property to develop. So cash flow is very important to us. We care about the operating margin because if a gold producer delivers a lower margin, then that translates to lower profitability, lower prices. So all these, we study deeply these values, these metrics, and we try to improve regularly how we analyze these companies. So as you pointed out very correctly, we used to use the realized operating margin. We used to just quote the operating margin. Then we discovered that maybe there is a better way to compare these companies by introducing a new margin called the standardized operating margin that accounts for the companies that hedge their gold sales versus the companies that don't hedge for the gold sales. So that's why we separated the two, and we find those are very useful metrics to help us improve on that analysis.
Right. And to finally move on to the production guidance for Evolution Mining for FY26, they've got a production guidance of 710,000 to 780,000 ounces of gold, along with 70 to 80,000 tons of copper at an AISC of $1,720 to $1,880 per ounce, which is not too shabby in my opinion, because we've got an AISC of around about 1.6K per ounce for Evolution Mining this financial year. So that's not, I would say, a steep jump in AISC for a company like Evolution Mining, especially considering the fact that a lot of mining companies have reported AISC guidances above 2,000 per ounce for financial year 26. So that's quite a positive sign for sure. And they've got a group capital investment forecast of $780 to $980 million for financial year 26, which is $200 million lesser compared to financial year 25. But we would say still a significant amount of investment to make for a company that size. So overall, would you say good things to come up for Evolution Mining?
So what I said, I'll qualify any of my opinions going forward as nothing. It's not an endorsement necessarily for you to buy or sell the company. This is just merely talking out of the facts that we have seen. It's important to note that Evolution Mining had a rough patch in the last 5 years. It bought the Red Lake complex in Canada back, I think, in 2019 for $500 million. And it initially thought that buying the Red Lake complex would be a highly lucrative investment, because the Red Lake complex is the mine that made Goldcorp the internationally renowned giant that it is now. it was also what made Rob McEwen a legend in this field, except Red Lake Complex is not what it used to be, and Evolution Mining sunk hundreds of millions of dollars into the ground, and it created quite a lot of it actually hasn't really paid off. There were quarters that the production was quite good, but it's not being able to maintain a quarterly production above 35,000 ounces a quarter for the last 6 years. It might get there finally. It looks like it's starting to move in that direction. What Evolution Mining wanted to do was that the Red Lake Complex was supposed to produce north of 300,000 ounces a year or 75,000 ounces per quarter. We're still quite a distance away from that, but it looks like things are getting off the ground on that front. The company has made very good investments buying Ernest Henry in 2016, the gold component and part of the copper component, and it paid in full in, I think, 2023 to buy the full mining, buy the copper part as well. So it fully owns the mine. Ernest Henry is probably the company's biggest cash cow. It's carried its weight during the years where all the other mines, for one reason or the other, didn't do well. It bought North Parks in 2023, and as we mentioned, it delivered excellent free cash flows for operating cash flow for the company. North Parks, again, just like Ernest Henry, big cash cow and quite long mine life. The company is paying record dividend, if I remember correctly, 13-cent final dividend. And that's what partly all these things put together is leads to why Evolution Mining is trading close to or above $8. It once almost headed to $10 before pulling back because of the whole gold producers were becoming quite overvalued. All these together, should the other gold producers, the larger gold producers in the coming 2 weeks as they release their results, should those results be very positive, then it might kick off a further round of corporate activity. We've seen that some of these larger companies are now looking to replenish their resources and reserves inventory, because during these couple of years, they've been focusing on the production, not so much on exploration. They need to recharge their inventory in order to extend their mine life. We've seen quite a few deals happen in recent times. Mount Gibson Iron it's an iron business, but it's actually moved to gold. Last month, it announced it bought Northern Star Resources' 50% stake in the Central Tanami Gold Project in Northern Territory. Keep an eye out on this one. Very interesting development. Capricorn Metals, they made an offer to buy Warreda Resources in, I think it was early July. Highly controversial purchase here. There are many retail investors who are grouping together to stand up and try to stop this deal. Personal disclosure, I'm one of the shareholders who are also trying to stand in the way of Capricorn Metals taking over Warreda Resources at the current with the current deal. And we also have seen Ramelius Resources, a mid-tier producer, completed the merger with Spartan Resources to create what could potentially be a very profitable large producer in the coming 3 to 4 years. So there's a lot of corporate activity that could be coming as a result of record performance in the financial year that we've just seen behind us.
Right. So a lot of exciting stuff we've covered today. Right. Before we wrap up, we'd just like to let you know once again that none of the contents in this video qualify as financial advice. And our intention of this video is to educate and entertain you. And we hope that we've achieved both, and at least one of the two. And our vision is definitely to achieve both to the best of our abilities coming into the future. And once again, this is a joint project between us and you. And we would welcome any form of feedback that you have to give us for this episode and for the series as well. And we'll definitely take your recommendations and feedback into account as we did for this specific episode. So with that said, I think it is a good time to let Mr. Brian continue with his holidays and for yourself to continue with your precious time as well. And thank you so much for tuning in, and we'll see you in the next episode.
Yeah, one thing that I'd like to add is on the education and the entertainment part. If this doesn't deliver, I guess the only thing that we'll have to do is break out in song and dance. And I'm not sure whether I'll be able to carry this one. You'll probably have to do that bit, Ved.
Yeah, I'm not sure if I could do it either. So we're going to have to get one of the other partners at GoldHub Australia and maybe some other analyst or employee to continue with the same.
Or maybe AI.
All right. On that note, I think this is a good time to wrap up the session. Thank you so much, everybody, for tuning in. We welcome all your feedback, and we will see you in episode 3 of the Australian Gold Weekly Review. Thank you so much, everyone.
Thanks very much, and everyone, God bless.